And Mark is here, so I mean, we could.
Okay,
This guy really knows gold. Okay,
perfect.
he's like
I'll be
Midas.
very interested to hear his point of view.
Okay, so thank you,
Enjoy the interview.
Dale. Thank you for letting me interrupt you all session again, once again. Just my MO. Mark, I see you, and I'm going to promote you to panelists and then unmute you. Looking forward to our conversation. It's been quite some time. Oh, yeah, I thought
5 years, I think.
I did the wrong guy. Hold on. Yeah, there. Okay. There you go.
Hi, Dale.
Hi, Mark. How are you?
Here. I'm great. Yeah, how are you?
Good. Gosh, it's been half a decade, you said, since you
I
and
think
I've
it's
had a
5 years.
conversation.
Yeah, I think it's 5 years since we spoke. So how you been?
Good, and great time to be talking to you, Mark. Are you going to be sharing your screen, or you want me to share mine?
I can share my screen. Yeah, I'm just trying to get the.
There's a little green box that says share on it. And
yeah, there's a little green button in the pop-up menu that says share.
Perfect. Yeah, I see it there.
It's going to ask you if you want to take the screen from me. Go ahead and say yes, and then it's going to ask you to choose the screen you want to share.
Yeah, perfect. Perfect. Done.
Okay, there you go. All right. So let me see, year-to-date relative performance. Interesting chart. So it's been such a long time, Mark, that maybe you could just give a quick, brief bio about how you gravitated towards sound money, hard money, and develop Gold Core and your gold business, and how long have you been doing this?
Yeah, very good. Well, thanks again for having me on. And yeah, it's 16 years since the company was set up, so 2003. And basically, I got into gold. Well, I studied history in Dublin, and my degree was in history. There was a lot of that was looking at the Roman Empire, the Greek and Roman Empire, and the collapse of civilizations. So, and within that, you see that the collapse of empire tends to be associated with currency debasement. So I sort of acutely aware of that. And then in the late 1990s, I was bought Irish property that was doing very well, and property went up 3 times, 4 times, like just small things like apartments. And I realized that this is a massive outperformance. And you see throughout history, markets tend to get returns of 5, 6, 7, 8% per annum. And when you see outsized returns of 20, 30, 40% per annum for a period of time, it's probably a sign that it's a good time to take profits, and particularly in a market like the Irish property market, it's not exactly the S&P 500.
So were all the realtors drinking Guinness during that bubble, or
you
what?
Better believe it. Yeah. And the bank, you better believe it. And the bankers, and we were partying like it was 1999.
and it was.
Yeah, it was every single year up until 2007, 2008, when the whole thing collapsed.
Remember back in 2000, because I remember I started, I liked gold, and we came down from 500 to 2 into the beginning of the millennium. And people were saying gold, it doesn't work anymore. It's an archaic relic. It's really a paperweight. Do you remember what people were saying in 2000 about gold?
Oh, I do. Absolutely. Yeah. And there was only a few contrarian people who were covering it, and I like to credit one guy who actually got me into it in quite a big way was sorry, I'll just rewind. So I started saying, right, the property markets even then, not in 1999, but by 2002, 2003, they looked a little bit overvalued. So I started selling. Obviously, September 11th had happened. There was a lot more geopolitical uncertainty in the world. The NASDAQ bubble had burst. And it wasn't just the NASDAQ bubble. Stocks in general, the S&P 500 fell 50% from 99, 2000, So,
the .com.
Yeah, exactly. Well, people talk about the tech bubble, but there was a wider bubble in the wider stock market. But so I started buying gold coins and gold bars myself in a private capacity, and I couldn't buy it here in Ireland. I had to buy it from in London, or I had to buy it in the States. And when I bought from the dealers in both the UK and the US, I found that their websites were very, very poor. The customer service was poor. There seemed to be a lack of understanding of what gold is as a hedge, as a safe haven, a store of value, and they weren't sort of educating people. Exactly as you were saying, there was all these negative stereotypes about gold and misinformation about gold as a barbaric relic, and it's from
Yeah.
the past, and only unsophisticated peasants in India buy gold type of thing, you know. Meanwhile, the central banks of the world maintain that their gold holdings, and some are beginning to look at gold again, you know. So anyway, so I realized, okay, well, I've bought gold, I own gold, that's great, but there's actually an opportunity here to set up a business. So I set up the business 2003, and yeah, we slowly grown it. My partner Stephen Flood came on board, and we sort of complement each other quite well. He has a background on Wall Street and in finance and trading, so he's good on the finance side, he's quite good on the tech side as well. And then I was doing more of the research and so the education piece about educating people, because there was such a lack of an understanding of what gold is, you know.
Why weren't you allowed to buy gold in Ireland? Was it
Well,
illegal?
no, it wasn't. No, it's interesting. It wasn't illegal, but there was VAT, very high levels of VAT,
I
value
see.
added tax, from the foundation of the
So it
state in
wasn't
1922.
competitive.
That's exactly it. So our tangible asset of choice became property, the land, the field, and because of our colonial past, recent colonial past, with the British elites, we wanted our land back because they had our land. They took our land off us, and we wanted that land back. So we have this massive affinity for the tangible asset of land and property. And as I said, that became our tangible asset of choice, because straight
Well,
away you're down 20,
they don't
25%.
they can't print land either.
Well, that's exactly it. Yeah, so
Yeah.
it's a good store of value as well, you
Yeah.
know. And so Irish people like there's no culture whatsoever of investing in gold. It's also, I think, we never had much money in Ireland. We were a poor agrarian nation for most of our history up until the late 1990s, early 2000s, when the boom
Right.
started. So there was never, if you don't have money, you're not trying to protect money, you know. So there's no culture of wealth preservation. We were always trying to make money, not preserve money. So in older wealth economies, such as yourselves over in the US, obviously, in Switzerland, in Germany, and Austria, these older wealth economies, people traditionally would buy gold, particularly wealthier people, because they want to protect their wealth. So we didn't have that culture in Ireland whatsoever. So it was a long, hard trudge, I suppose, but we've made steady progress over the years, and we've grown now, whereby we've clients in 140 countries, still mostly Ireland and the UK, but we've got quite a large amount of US clients as well. And we've clients, as I said, 140 countries. We've done $1 billion in sales as of last year.
Congratulations.
Benchmark, yeah, that was a milestone for us, which was great. And our assets under management, while most of the market was struggling in recent years, because it was a tough time in the gold market, particularly 2013, when gold prices, we might look at it now, but gold prices fell 20-30% in 1 year, you know.
Yes.
I got the tail end of your discussion there about why gold might fall, you know. We might get into that. But most of our competitors were struggling, and we've actually been growing assets about 20-25% per annum. So what we do is we're brokers. We broker gold coins, gold bars, silver coins, silver bars. We make a market, very competitive prices, particularly in volume. But what we specialize in, basically, gold is a safe haven asset. History shows that, recent history shows that, and all the research shows it as well. It's amazing how the media completely ignores this, and the Paul Krugsmans of this world, and the so-called financial experts. All the academic research, when they crunch the numbers, both academic research and independent research from asset allocation experts, so the likes of Ibbotson and Mercer, big pension fund advisors, they've all crunched the numbers, and they all say gold is a hedge. Gold goes up, as you guys were talking about, gold tends to go up when stocks go down, you know, or bonds go down, and when there's risk in the world. So it's a hedge, it's a safe haven asset, it's a store of value. So, but it's only a safe haven if you own it in a very safe way. You know, you buy a gold ETF, you are buying shares in a trust, and you have a huge amount of counterparty risk in terms of the custodians.
Right.
Custodians.
Right. So, so you specialize in showing people how to hold it besides a coffee can buried in their backyard.
Yeah, exactly. I mean, they can do that if they want to do that, and a lot of people do both. Actually, you can take delivery, and there's no harm for small amounts if you feel very secure in your own home. But yeah, no, we specialize basically allowing people to own gold in the safest vaults in what we believe are the safest jurisdictions in the world. So the most popular jurisdiction with our clients, and indeed with high net worth around the world, continues to be Switzerland, and particularly in Zurich. And just the Swiss are very conservative, and they don't have that much debt, and there's a lot of respect for private property. And they survived World War II and Hitler on their doorstep, so I think they'll survive Brexit and the trade wars and all the risks that we have today, you know. But Singapore is quite popular. Hong Kong was popular. A little bit nervous has crept in about Hong Kong recently. So that's basically what they'd be the primary. Yeah, exactly. Well, yeah, no, I think there's a lot of political risk, but I don't think the Chinese government is going to confiscate gold there anytime soon, because if they do, they'll destroy their own economy and all the progress they've made the last 50 years, you know.
Okay, interesting insight. So,
yeah.
okay, yeah, let's get to some of your thoughts on the market here. I mean, you
Okay.
started off with it'd be unusual for someone who's in the business, a believer in the product that you market, to be aware that gold could fall.
Yeah.
What would be market conditions that could make gold fall? Now, you know, I'm seeing right now people that didn't like it at 1100, 1200, they love it here now. I mean, now they're finding all the reasons to own gold
Yeah. Yeah.
that
Yeah.
they didn't see $400 ago.
Yeah.
And I think that, you know, that there's going to be a pretty good shakeout, even if silver and gold make new highs here, that there'll be better levels to buy it. Why do you think gold could correct or come back down?
Well, it's a big move up in a short period of time, and as we know, markets tend to be, you know, 2 steps forward, 3 steps forward, 1 step
Okay.
back. Yeah,
So
so
just a
I agree
normal
with you.
market correction.
Yeah, I think so. I mean, we were up, as you can see in the table there, we're up 17.6% year to date. So we're outperforming the S&P
Yeah.
year to date. But it's interesting if you look at the over 12 months. Gold has actually
Number
significantly
two.
outperformed stocks and bonds, and this is to me is a more interesting and more important relative performance chart, because you can see here gold is up 25% over this 12-month period, but the S&P 500 is only up 2.5%, and you can see the Euro stocks are down. The DAX in Germany is down 4.5%. The Nikkei is down 7.6%. So it
Yeah.
looks like, I think you alluded to this recently, Dale. It looks like the stock markets globally are beginning to roll over. You know, and I think the smart money is taking chips off the table, and they're reducing allocations and they're increasing allocations
This is
to
the
gold.
first time you could show a chart like this, a 12-month period in many years, isn't it?
It is,
Where's
yeah,
where?
exactly. Yeah, yeah,
Yeah.
yeah.
Go
Where
ahead.
gold outperformed, absolutely. Yeah, yeah. So
Okay.
why could gold correct? I mean, you're up 25% in 12 months. You know, so you're possibly due a correction, but particularly in August alone, I think we're up 8%. I can actually show you that. So one month. This is finviz.com. They're very good. I really like their these relative performance charts in particular. You know, and then they give little snapshots. You can even look at it on a daily basis. You can really get a feel for what's happening in the markets very quickly. So the 1 month, so gold's up, yeah, 5.5% in just literally the last 3 weeks. So,
Okay.
and then you can see that in, this is the chart here. So this is gold in US dollars. This is from our website. We have a chart section looking at gold in euros, pounds, dollars, and Australian dollars. So over 5 years, you can see there's a big breakout here.
Yeah.
And yeah, I think we
That's when you
possibly,
called me. You wanted to go on. I figured it was because you saw that 1370 breakout, 1360 breakout in.
yeah. Well, the mood music has changed, as you alluded to, and we're seeing a lot of investors come back in. The smart money who actually bought before the last crisis, who were buying in 2004, 2005, 2006, they're coming back in now. You know, so when you look at that chart there, you see there was a lot of resistance around the
Right.
1350 level. So quite possibly could go back down to the 30, and then there was a lot of resistance around the 1400 level, and then we went through it very quickly. So I do think most probably you would expect it to correct back down to the 1350 to 1400 level. You see it probably more clearly over a one
And I
year
think,
chart. I mean, that's a
how
big
would
move.
how would you explain the dollar being stable? Because you know a lot of people correlate gold to currency, especially the reserve currency. Dollar really not having been weak. I mean, the euro's scraping against 52-week lows. Cable is dollar relatively stable with a higher gold price, and with the dollar being the strongest currency out there, and gold appreciating against that, isn't it really a true bull market when it's appreciating against everything, every fiat currency, and that's what's going on?
Yeah, absolutely. And we do tend to, so we don't, but the media does tend to focus, and most analysts tend to focus gold exclusively in dollar terms. And obviously the dollar has been very strong in recent years, so one of the strongest currencies in the world, obviously. And that's contributed to gold's underperformance. But that has very much changed in the last year. And gold has actually hit all-time record nominal highs in most fiat currencies in the world. So in British pounds, obviously the Brexit revives and the concerns about the UK economy and the amount of debt in the UK, sterling's come under huge pressure. But it's also gold is at record highs in Canadian dollars, Australian dollars, the Chinese yuan, the Indian rupees. These are some of the major economies in the world, and people are buying gold in these nations because they're worried about the economic outlook. They see their own economies beginning to slow down. Obviously, you've got the trade wars, you've got the headline risk in terms of geopolitical uncertainty. see, between tensions with the US and the Western world, has tensions with Russia and China, and obviously that's the issue in the Middle East with Iran. So there's a lot of sort of potential banana skins there, shall we
Yeah,
say? You know?
could that also be a double-edged sword, Mark, in a way, because central banks, China's been a huge hoarder, accumulator of gold, as well as Russia, and if their economy does turn south and they don't really have the reserves they need to support the yuan, even though they're going to let it go, as weaponize it in this trade war, is it
Yeah.
possible that Russia or China, because they may be under financial duress, say oil for Russia falls back under $40, that their central banks could unload some of the gold that they've been accumulating over the last 5, 10 years?
Yeah, it's possible, but I think it's unlikely in the short and medium term anyway,
Okay.
because the amount of gold they have relative to their foreign exchange reserves remains very small, in dollar terms, and also the amount of gold they have compared to, say, the US is obviously the biggest holder of gold in the world at around 8,100 metric tons, followed by the Bundesbank in Germany, the Italian central bank, the French central bank, all of which are around the 3,500 metric tons mark. So I think the
Okay.
Russians are up to about. We actually cover this. We do a daily market update that is one of the most followed market updates in the world. We have a huge amount of
Nice.
subscribers to it. Yeah, and just today, actually, we looked at the Russians announced yesterday that they bought another 300,000 troy ounces in July, and that brought their reserves to 100. Their gold reserves are now worth 101.9 billion dollars.
You mean Putin's gold reserves, not Russia's, right?
Well, potentially, yeah. Putin and the oligarchs surrounding him, potentially.
they're, they're pretty long right here. So,
Absolutely, yeah.
I remember, I'm like an elephant. I remember when we were talking, I think it was right after the bail-in that we had in Cyprus. Okay, and you really keep your finger on the pulse of banking situations, and we all know that Deutsche Bank is a basket case. And I'm wondering if that was the most publicized bail-in. We really haven't had, and some pension funds, it's happened in Poland, but do you see any type of draconian type of measures that might happen in Europe, especially with what's happening in Italy and Deutsche Bank and the Eurozone in a whole, where there could be some type of bail-in or some type of banking problem that could lead to the next leg up in metals?
Yeah, I do, and I think you're right to look at Deutsche Bank, because their share price only last week hit an all-time record low. I'm sorry, today I think it may have gone. So that's the 5-year, and you can see that there, the 5-year in Deutsche Bank.
Yeah.
That's 5 days. Oh yeah. So the record lows was last week. I think it was last Friday around 582. So it has had a little bit of a bounce there. But yeah, I mean, Deutsche Bank is, I think it's the biggest bank in Europe. Commerzbank is also in a lot of difficulty, which is another very big bank in Germany. And there's talk of a forced marriage between these two banks, and Deutsche Bank has a massive derivative position as well. But there's issues with all the European banks, the Italian banks in particular, but, the French banks, so the UK banks, the Irish banks. Unfortunately, we all know that expression, we kick the can down the road. We all used to use that expression 5, 6, 7 years ago. And then we forgot about it, but we did kick the can down the road at some stage. The fundamentals of the amount of debt and the amount of liabilities in these banks has not been resolved, and therefore I do think that when you see that share price moving like that and going to record lows, it means that the investors out there just don't trust that bank. So, and then as you said, the bail-ins that's in legislation in the European Union, it's in legislation in the UK, it's in legislation in the US in terms of the FDIC, the Federal Deposit Insurance Corporation. So in the next crisis, the depositors will suffer haircuts, and there are deposit guarantees in most countries. I'm not sure in the US. Are you $250,000? Is that your deposit
I believe
guarantee?
that's still FDIC. Yeah.
Yeah. So, and what's interesting is, so in Europe, in Ireland, and most European countries, is 100,000 euros is the deposit guarantee. So the state is saying that you are safe once you won't, anything above 100,000 can be bailed in and confiscated, basically, in order to bail out the banks. That's what a bail-in is.
Right.
So
People don't know that once they deposit their money into a bank, it's really not theirs anymore, is it?
no, exactly. And today you're not even getting any, and you wouldn't mind if you got some return and you got some yield. So you're taking risk with money in the bank, and you're not getting any return. You're not getting any yield, and
Try and
potentially.
take some cash out of your account too.
Oh,
You
I
know
know.
that,
We have. Yeah, yeah. We
I
have
mean,
clients every single day. We have stories from different banks around the
yeah,
world making life difficult for people. Yeah, yeah. And
yeah.
that's in a good economy. So you can imagine in a bad economy when these banks are under pressure, what's going to happen?
Yeah, I mean, I wanted to cash rather than deposit something, and they didn't have enough cash in the bank. Made me think, that's just me. You
Yeah,
have to order
yeah,
the cash. What if 100 people? I think Jim Rickards talks about the ATMs being empty one day because it's all digital dollars. So anything you see on, okay, so we're looking at Deutsche Bank. Anything on
yeah. We
the,
actually covered that last Friday.
okay,
But what's interesting what you say about Jim Rickards, and yeah,
yeah,
he's very good, very astute. A guy that I had on last week, or it was probably two weeks
Jim
ago this stage.
Rogers.
Jim Rogers, yeah, and
Yeah,
he was fascinating because he was telling me he buys gold coins, silver coins. He doesn't
yeah,
trust the banking system. And what was interesting as well, he got into where he stores his gold, and he lives in Singapore, so he has gold
right.
stored in Singapore. But he also likes Switzerland too, and he said that the generals and all the elites have their gold stored in Switzerland. So if the elites have their gold stored in Switzerland, they're not going to destabilize Switzerland. They're not going to invade Switzerland. They're not going to bomb Switzerland. Switzerland is it is the most neutral country in the world and continues to be, and it's not part of the European Union. And it's barely part of the UN, even though the UN part of the UN apparatus is there, also in Geneva, So
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 what
yeah,
good?
so
Let me ask.
electronic money and paper money, I mean, it's crazy. They just go on a keyboard. The Federal Reserve needs to be, and they will control P, and they will create hundreds of billions and trillions of dollars, euros, and pounds. And as you said, that's just electronic things that we get out on the ATM and we use in
Digital.
day-to-day transactions. Exactly, it's digital money. It's no different than Bitcoin or cryptocurrencies or
Okay, you brought it up.
psycho currencies,
Okay,
as Mark Mobius called them yesterday.
what do you call them?
Psycho currencies.
Psycho.
Rather than cryptocurrencies, he calls them psycho currencies, which I think is a
All right.
bit harsh, but
All right.
it was an interesting point he was making.
Blow up the argument of the commercial saying why drag around bullion when you could own digital gold, which is Bitcoin.
Yeah, well, Bitcoin is around for a very, very short period of time, so it hasn't proven itself as a store of value as of yet. And who knows, in time it might well do. But as you said, it is also digital, so you have a huge amount of risk in terms of where you buy the Bitcoin, how you on what exchange the exchange gets hacked, the owners place silly
there,
buggers, and I am. Yeah, can you hear me?
My
I'm here.
internet connection is unstable.
Okay.
Okay, it was me. Okay, so go ahead.
No worries. Can you hear me?
I can hear. Yeah, go ahead.
Yeah. So you're just saying that Bitcoin, I mean, when you buy it, you have a huge amount of intermediation risk and counterparty risk because you're buying from these exchanges, many of which have been hacked, and founders have disappeared with people's holdings of Bitcoin. So you can own Bitcoin obviously on Trezor wallets and take it off the exchange, if you will. But then it's who are you going to sell it to, and in worst case scenarios that some of these people believe in that the system is going to collapse, then as you alluded to in terms of ATMs, one of the biggest risks is actually on the electricity side, because if you don't have electricity for a period of time, then you don't have Wi-Fi, then you don't have websites, then your Bitcoin is no use to anybody whatsoever, So I think it's I think it's great. I own a little bit of Bitcoin, don't get me wrong, I'm not anti-Bitcoin, and in time, who knows, Bitcoin, to me it's binary. Bitcoin will go to zero or it'll go to 100,000, 200,000. So if you want to, you can speculate and own a small bit of it, but you shouldn't see it as a store of value. It is, at this moment in time, it's a really exciting technology, and obviously the blockchain behind it is what's really, really exciting. But then the other question is, which cryptocurrency is going to survive? I mean, it could be it could be Litecoin, it could be some the Bank of England, all these big central banks are testing their own cryptocurrencies. Obviously we have Facebook come on the scene now with Libra, so potentially Libra could become the cryptocurrency choice, and then there are conversations we have with companies about making a gold cryptocurrency, and whoever I think cracks the nut of a proper, safe, fully backed, fully segregated ownership of gold via cryptocurrency, a gold cryptocurrency, I think if that gets mass adoption, then I think that will become the cryptocurrency of choice, and that poses risk to Bitcoin as well. Okay. So yeah, it's an interesting space. I keep an eye on it because because the bottom line is the current monetary system, fiat monetary system, is a giant Ponzi scheme. It's a giant experiment they're engaged in. Lord Rothschild, the Rothschilds, the scion of the Rothschild family has said that
we're reserve banking system, fractional reserve.
Yeah, fractional reserve banking system, and also the fiat monetary system. And he's basically said that what the central banks are doing in the last 10 years is a giant monetary experiment, and it won't end well, So this is one of the wealthiest families in the world, and the smart money knows this, and that's why they're preparing for the next crisis.
Okay, so let's say the next crisis hits. This is I want to wrap it with this. Okay, next crisis hits. There are currency controls, all kinds of draconian controls that happen here in the U.S. I put $250,000 into gold that is stored in Switzerland or one of the other banking relationships that you have. How does it help me if I can't do anything here in the U.S. and I'm stuck?
Well, you should take delivery of some if you feel secure in your own home. And we always encourage all our clients to have some gold in country, if you will, to protect against exactly that scenario that you've said there, that, it could be exchange controls, it could be capital controls for a period of time. So, and then if there's a systemic crisis whereby the grid goes down for a period of time, the next generation of warfare is EMP, electromagnetic pulse, which will take out grids. And if you take out an electrical grid in New York or London, the market's going to be closed for a period of time, So yeah, so if you feel secure in your home, as I said, take delivery of some gold. Own gold near you if there's a depository near you in the state or near the city you live, or there's a safety deposit box provider that you see is very secure, maybe potentially own some gold there. And then the beauty of owning some gold offshore, Switzerland is obviously very, very safe, as I alluded before. So what would happen in that scenario, in that worst case scenario, is if you've gold in Switzerland, it's highly liquid. You don't have to go and pick it up and bring it to a provider and try and get your cash. So you would sell either online with us or on the phone with us, providing you can get us, and most probably will. But if you couldn't do that, then you can actually fly to Switzerland and you can actually go to the vaults with your rent-a-car, and you can actually collect the gold out of the vaults, and you can drive into Zurich. So you can actually transfer it into, most of the big bullion dealers and bullion banks in the world store in these vaults in Zurich. So you could transfer your gold to another bullion dealer, bullion broker, and you could get cash. You could set up a bank account in Switzerland, or I don't know if they'll be handing you cash, Swiss francs over the counter.
Yeah.
But so you have that liquidity in those worst case scenarios, And so I just think it depends on the individual. If you've never been outside the United States, you're not a big believer in traveling and all the rest, then it's probably not for you. But if you do see the benefits of potentially, in the worst case scenario, people have second passports. People consider having residences in foreign jurisdictions and owning assets in other jurisdictions. So you're not concentrated with all your assets in one country.
Yeah, Doug Casey talks about that all the time.
He does indeed, yeah. He's very strong on that. And Bill Bonner, who is one of the guys, these are the guys who educated me back in the early 2000s, and they're smart guys. And people might sneer them in recent years. They've been wrong because of the scale of the recovery, but it's totally artificial based on the printing of currency. It's not sustainable, and therefore they'll be proven right again,
Well, I'll tell you what, Mark, let's not let half a decade pass again. And everyone that's still around and then watches the video later, Mark, it'll be out on Twitter in a few hours. Mark is a great resource.
Tweet it and retweet it.
Yeah, Mark is a great resource for knowing how to diversify into gold, silver, all precious metal products, physical. Great source on his website for content about the metals and what's going on. And you could tell Mark is very much aware of what's happening to the global financial system, and looks like you have great guests. So maybe you could do me a favor and ask Jimmy Rogers if he would do an interview with me. So
I will. I'll do that for sure.
That would be a feather in my cap. So look, you have Mobius, you have all these guys, Mark.
No, I didn't have Mobius. Mobius was on Bloomberg, but I'm going to reach out to Mobius. He'd be a good guy to have on. Yeah.
So it was an enlightening discussion, and Thank you so much. You're my trading warrior brother, Mark, and I'm so glad you reached back out to me. And I'd like to have you on more frequently, at least 3-4 times a year, to keep our community updated.
Very good. Yeah, no, I'd like to do that, and I look forward to doing that with you, Dale. It's good to touch base with you again.
All right. Well, thank you for edifying our community today, Mark. Good luck, and thanks again for your time. And may your business continue to grow and hit new benchmarks.
You're very kind, Dale. I really appreciate that. Thank you.
All right, everyone. That's a wrap for us today. And remember, most of all, don't just count your pips or coins or bullion bars. Count your blessings. You're very welcome.
So true. So true.
And we'll see everyone tomorrow. Thanks again, Mark.
Thank you, Dale. Take care. Bye-bye.
Adios.